Meet Jeff. Jeff wants to learn more about investing in opportunity zones and decides to reach out to his CPA Carly. Carly explains that opportunity zones are designed by the Tax Cuts and Job Act to encourage investment into economically distressed and low-income areas through capital gains incentives. She explains that investors can defer capital gains tax from any investment if it's reinvested into an opportunity zone property. Those capital gains are not taxed until the end of 2026 or when the asset is disposed of. Carly explains that if an investor holds on to an opportunity zone property for 5 years, the taxable gain reduces by 10%. If it's held for 7 years, the taxable gain reduces by 15%. For example, if you received $50,000 in gains, only $45,000 is taxable if held for 5 years, and only $42,500 is taxable if held for 7 years. Carly says another tax benefit to opportunity zones is tax deferral on a property's appreciation. If an investor invested $100,000 into an opportunity zone project and held it a minimum of 10 years and is eventually sold for $300,000 due to appreciation, that investor would pay zero taxes on the $200,000 gain. Keep in mind, there are certain rules to follow in order for the project to qualify with the IRS, so be sure to speak with your professional. Jeff now fully understands the opportunity zones and the great advantages they provide to investors and lower income areas.